over and over again because it's very important. Let's see if there's any numbers coming out this morning. Factory orders, a small number coming out here at 9 o'clock at the top of the hour. That's really about it. So stormy predictions. While a recent decline in commodities have provided slight optimism, the central bank's monetary policy will feed directly into investment sentiment over the next 6 months, as well as the potential for a damaging recession. As we continue to downtick, the next level of support we have down here is at the 53 area. The good news is the first half is now over. The bad news is that the outlook for the second half is not looking good, said some strategists from Deutsche Bank. Many of the tailwinds for investment markets are now becoming headwinds. That points to a phase of ongoing market turbulence. Investments will need to be realistic about return expectations. We'll need to think harder about diversification and portfolio resistance. Oh yeah, the portfolio resistance. Yeah, okay. On economic calendar this week are minutes from the Fed June policy tomorrow, and the release of the closely watched jobs report on Friday. Investors are already on edge following last week's warning from Meta, Facebook, which slashed engineering hiring to prepare for one of the worst downturns that we've seen in recent histories. That's in quote. Meanwhile, the Atlanta Fed GDP now forecast for the second quarter is now pegged at minus 2.1, setting up a perfect storm. It was only 4 days ago that the GDP tracker predicted a negative print, falling precipitously from an estimated 2.5 growth in the mid-May that flatlined in June. So that's not looking good. Oh, that's not looking good. Well, I think we're in the market's priced in a recession, but I don't know what the bond market is doing right now. That's all I can tell you. Bond market is really acting a little weird right now, considering what's going on. And you know me, bondy guy. Bondy guy. I'm just saying. They're acting a little bit strange here, those bondos. Not acting like there's going to be a big hike. But what do I know? I mean, I'm not going to trade it, right? Just because I'm telling you, I'm not going to, it's just, I just want volatility in the market every day. I get that, I'm happy. As long as the market moves around, we have opportunities to trade. That's all you could do as a trader, or all you should expect, I should say. All right, anybody has any questions? We come down here to continue to downtick here a little bit, looking at the 53 areas or next support level. If anybody has any questions, feel free to put them in the chat, please. Don, how you doing? Good. Well, I'm a little shooken up by this the shooting here that happened, to be honest with you. Did you hear about it? Yeah, literally, it's a town I live in, and I've been to that parade when the kids were younger, and just I can't even imagine how those parents and what was going on, those moments. All right, we continue to downtick, looking at the 53 area here, trying to work this area here a little bit, got down to 53.5. Giving us a little bit of rotation here, depending on how you scaled in. Again, you have to have your orders in place, and then, your exit strategy is basically in place at the same time. That way you can take advantage of those rotations when they occur. Okay, nice little rotation there against our 53 area. Got down right down to 51.25 there. Again, you're scaling in, so hopefully you were able to scale in. And even if you got 53 straight up, you got a nice little rotation here, kind of make up for those. Well, depending on how you handle those, the 71 to 63 area. That's another story, obviously. All right, so nice little pop off of that 53. Let me give you some levels on the downside here, down, so I can put a stop to this break in the market. We did that, yeah. We've done that we've done that really well. We got 53, then we got 45, 36. I got 27, and then 20. Below 36. So that should put an end to this little break here. Trouble is brewing in Europe, where the euro just hit the lowest level against the dollar since 2002. Traders are gouging the amount of hiking the ECB will be able to pull off. Thanks, Don, for adding those. Given the growing fears of recession that could compound problems resulting from the war in Ukraine, that would translate into a tougher time matching U.S. interest rate hikes. On top of the risk-averse investors that continue to pile into the safe haven greenback. The dollar is up 9% versus the euro since the start of the year. Now, that's, I guess, the safest place to be these days, even though here it doesn't look good. I guess there's more risk over there than there is over here. So they're all buying the dollar instead. Crazy, right? The question on how the ECB will deal with potential widening in the spreads is set to come increasingly to the fore as they almost certainly embark on the first hiking cycle in over a decade this month, said Deutsche Bank guy again. Gee, the Deutsche Bank guy is busy. VIX is almost at 30. Wow. And yesterday we heard some further comments from the ECB officials on that hiking cycle, with one of them pushing back calls from others to start 50 basis point hikes, saying that it was appropriate to begin with 25 basis point move in July and then a 50 basis move in September that they have signaled. Nobody knows what the hell they're doing. I mean, if you're going to just raise it, just do it already. We're getting, whoever doesn't think we're getting in a recession, it's just not, doesn't make any sense. On the geopolitical front, Russia next week will shut down the Nord Stream 1 pipeline for summer maintenance activities, but many regulators and analysts fear the EU's biggest piece of gas import infrastructure won't be turned back on. Yeah, well, what a surprise. The Bank of England also sounded the alarm in its latest financial stability assessment published this morning, warning that the outlook for the economy has deteriorated materially and is very uncertain. Given this, we expect households to become more stretched in the coming months. They will also be more vulnerable to further shocks. No wonder the market's going down today. Jeez. Nothing good is being said here. All right, the next support level we have is down at the 45 area. Anybody have any questions, feel free to ask in the chat. And VIX is up at the 30, almost 30. So we are definitely getting some volatility in these markets as the markets continue to downtick here. But like I said, the bond market, I mean, they are, something's up. maybe they're expecting a big bond rotation to the downside in S&P's equities. Maybe you're getting a little, or maybe they're just not looking at a 75 basis point move. But the bond market is definitely telling us something different. Don't know what, but we'll find out soon enough. Chinese tariffs appear to be back on the table at the White House as Biden administration continues to confront red-hot inflation readings. At a basic level, some economists have found that Chinese exporters generally didn't lower prices to keep their goods competitive. U.S. importers passed the duties onto the U.S. American consumer. Others say that the move would not target inflation at its core. Tariffs have been around since 2018 and would do little while rewarding on authoritarian government. Okay. Yeah, I don't know what they're doing over there. They're stuck in that White House there. I have no idea what's going on. But then again, neither does the Fed. All right, we are trying to bounce here off of that 53 support level. It got down to 51. So if you were trying to stay long and have a stop there that did not get filled, you're getting paid off here. A small number coming out here at 9 o'clock. Can we repeat, if those of you just come in a little bit late, if you want to see the levels again, we'll look at the chat. We'll repeat the levels in the chat for us in just a minute here. There they are for us. We got a factory orders number that's supposed to be released here at the top of the hour. So we'll see if that creates any volatility. It's a small number. I don't think it's going to create too much opportunity, but who knows? We've had a lot here already this morning. All right, nice little rotation. Got resistance right now around the pivot there on the top side. I've got next support level down at 45, or good resistance around our pivot area there. All right, kind of just hanging here on these lows. Next support level we have is down at 45. We gave you some other levels to consider on the downside there if we continue to downtick. This is after a long weekend here, and so we have to see where the market is weighing in all the news from the long weekend and stuff going on in Europe, the dollar being so strong, bond market here extremely strong. Kind of hanging here on the lows. We'll see where we want to go next. The next support level is down at 45. We do have a number coming out here in about 6 minutes. Trading on the lows here, we're looking at 45 as the next support level. We do have a number coming out here. In about 4 minutes, so be mindful of that. Oh, we continue to down to looking at the 45. Remember, we have a number coming out here in about 3 minutes, so definitely have to be mindful of that. All right, market. All right, we do have a number that's just being released now. You can see how it's creating a little bit of volatility. Got support down at the 45 area. We drifted down to 47.5 there and came back up. So be a little bit careful there if you're going to take the 45. Again, everybody has different risk tolerances, so you have to understand your risk tolerance and trade it accordingly. and different ways of handling risk. All of those are dependent on you as an individual and how you deal with that stuff. Well, what I'm trying to say, not everybody has to take every trade, right? It all depends on how you manage your risk and how you manage your number of contracts you trade and so on and so forth. Well, we did get down to 45.75. So if you did get in there at 46, you got a nice quick rotation here. Again, you definitely have to scale in. Well, it cannot be perfect. It's impossible to be perfect. So we always ask you to scale into a level, and there's a nice rotation here against the 45 area. Very nice rotation. Man, that was a quick one. These are the ones you love, right? No pain. No pain whatsoever. All right, nice little pop here against our 45. Wow, that was a big rotation there. Wow. He had 14 points in a minute, less than a minute. That's crazy. It's absolutely crazy. But that's the volatility that we're in. So you have to manage that accordingly. All right, we drifted quickly down to the 45 area there and rotated nicely off of that level. Next resistance area we have is up around the 74 area for the time being. And next support level we have is going to be down at 36. Again, if anybody has any questions, feel free to ask in the chat. Next support level was down at 36. We gave you A couple other levels underneath that, 27 and 20. They're in the chat if you look up there. A nice little double bottom there. Again, got down to 44 there and rotating up here a little bit. Resistance right now would be around the 65 area. And support right now would be down at 36. Again, patience is important. You gotta have some patience here to wait for opportunities to get triggered and stay away from this choppiness here in the middle, unless you like this stuff. But I would say you'd be hard pressed to figure out which way this stuff's going to go. Again, we're just chopping here up and down, a little range game here. So be patient. Support down at 36. Now we'll go next resistance area up at around the 65. Very, very whippy, as you can see. The VIX is up there, so definitely a problem. All right, there. Philip, always good to hear from you. Good to hear you're leaving. I like it when you leave early. Great. Now we're coming up here to the 65 area in case you're a little aggressive here, looking for a little price action opportunity. All right, nice little rotation there against the little 65 area that we said we'd have some resistance again against. Coming down here. All right, nice little trade there if you did decide to jump in. Again, we have to be patient, like I said earlier, and wait for opportunities. Very important, instead of just playing that choppiness that was occurring before. And if you did that, you were patient and waited for a nice little opportunity there to take advantage of it. All right. Nice little trade against the 65 there. Again, if you're looking for a little opportunity, that was it right there. And we had a nice little bounce against our support level down at the 45 area, got down to 44 and rotated up. And we said we have some resistance up here at 65, and we had a nice little rotation against that. The market gets above, I'd say if the market gets above the 72 area, they might rally back up to the pivot area. I don't know. We'll see. All right, again, chopping around here, coming back down here off of that 65 area. Next support level is down at 36. Yeah. Thank God he's going home today. Long weekend. Yeah, well, we had a whole container of treats. Of course, went through them all, and of course, his mother says, "You can't give him so many treats." I go, "Oh yeah, I can. If you're here, then you can give him less treats. But since I'm here, and boy, does he jump up when you say the word treats." Can we explain the levels? Sure. The levels that we give out have support and resistance areas, as you can see, and we'll repeat the levels in the chat for you. And support levels actually would be buying opportunities, right? Because that, by definition, support. And resistance areas would be areas where you'd look to sell the market a little bit. So we suggested, and we had those levels that we saw, support areas at 71, 63, 53, and 45. You can see the low of the day today was 44. So we had our support level, and it was a buying opportunity for us down at the um, 45 area. In addition to those other levels that we had to manage or work, because 71 and 63, they kind of ran through a little bit, but then again, they occurred right on that first bar. So there's a little bit more trickier and a little bit more riskier those first couple bars in the morning. And then we did manage and work well against the 53 area and then the 45 area, 45 area. So those areas are areas where we focus in on as buying areas. We did suggest, or I suggested, that we have resistance areas at the resistance area at 65. And it was a price action play. So you could have sold the 65 area about 10, 15 minutes ago, and you had a nice rotation against it coming back down because that would be a resistance area. So we have support and resistance. We're basically trading ebbs and flows of the market. We're looking for these opportunities, these ebbs and flows against these support and resistance areas to give us buying and selling opportunities. And that's what the levels are for. And then there's also, like I said, price action opportunities that occur once the market paints some bars and gives us those other opportunities like the 65 area. Whatever I'm talking about or saying here is a methodology of trading that we teach. We have a education course that teaches all this, how to figure out these levels, to understand why they would be there, and to be able to find these areas on your own, to be able to know how to get into them, how to exit them. Because I mentioned before that we're talking about scaling in, scaling out. Those are all depend on your risk appetite, and everybody here has different risk appetite. How many contracts you trade, how you get in, how you get out, what your goals are, so on and so forth. So that's what we do here on an everyday basis. We used to do this from the floor of the exchange, but because of COVID, they kind of canceled the floor out on us. Very sad. But it is what it is. It's a new world we live in. So I hope that kind of gave you a little explanation. All right, we're just kind of hovering here. If we get above 70, we might have a little rotation, like I said, up to our pivot there at 78. Otherwise, our support, if we get below 42, we'll look for a push down to the 36 area. And again, right here in the middle, pretty much the no trade zone as we are chopping around back and forth. And it gets a little choppy here in this little area where the market's kind of trying to figure out where it wants to go next. So we gave you little parameters there to look at above 70, and like maybe a run up to the 78, below the 42, maybe a run down to our next support level there at 36. And we're here in the middle. Let's be a little bit patient and wait for the market to decide what it wants to do. We'll get back here in a little bit.